Good morning. Welcome to the SEAF model. I'm Jack Kosar. This is effective for the week of December 22nd, 2025. Let's get started. SEAF signals for this week. We got communication services, consumer discretionary industrials, with industrials being the only holdover. Industrials being held up very much by its tactical month and strategic quarter, but starting to weaken a little bit on scores. Seeing some nice, strong, positive scores out of communication services and consumer discretionary. Um, and in the reverse, seeing some low scores here on technology and energy. Overall, headed into our heat map. Net, we were pretty close to just net zero last week in terms of flows. 3 of the 5 days were up days, with 2 strong up days on Thursday and Friday to kind of finish out the week after what appeared to be a little bit starting of a weaker week. So mixed bag, net zero, like I said, asset flows. Really strong asset flows here on the trading week for communication services, 0.67%. If you're new or forget that I mention every week, 0.4 on the trading week is a significant number in terms of inflows and outflows. So seeing 0.67 means this is pretty large convection bet. So much so that it actually carried over a little bit into the tactical month after having pretty minor strategic quarter here for communication services. Similar thing here for consumer discretionary, 2 on the trading week with a 0.26 inflow. For number 2, that's pretty solid. Got some solid green here. Overall, we're more or less aligned as we're transitioning into these 2 new sectors. A little bit weak on the strategic quarter. Like I said, in healthcare, kind of hanging around here on that strategic month, coming in at 4th. Technology, strong outflow, negative 0.75 for technology, showing a little bit of weakness there, and energy kind of returning back to the bottom after a brief interlude here at the top. Like I said, overall, decently trending here, middling flows for almost all the sectors outside of the top 2 and the bottom 2. Heading into our sector spider total AUM chart, we check marked off that 21-day moving average, not quite, never quite actually passing it down. We're going back to retest the all-time highs at about $343 billion for the total assets under management. This tool still seems to be pretty good. We're currently up on the trading day here on Monday. Adhering to this 21-day moving average. Obviously, we saw a little bit of weakness as we slid into that 21-day moving average, but the support did hold here, and it seems that we also held here on the SPY chart. So again, this is just one indicator, but in general, when the total assets of all 11 sector spiders are trading above or are collectively above the 21-day moving average, tend to see some positive price appreciation. It's when we collapse down below that 21-day moving average that we really start to see the weakness in the S&P 500 in general. Heading into our rainbow charts, starting off with energy. Energy is our worst sector so far. As you see here, we went a little bit into favored again, couldn't sustain it for too very long, and now we're trending down back into that negative trend in terms of its relative performance versus SPY, continuing what is more of a longer-term downtrend in energy. Communication services, this is our best sector. As you can see here, we kind of vaulted up through favor, up through neutral into that upperish favored. This is coming on a nice positive uptrend in the communication services after we kind of collapsed in Q3. So we had that little bit of a downturn in the relative outperformance versus SPY. Overall, still trading in pretty much a box going back to the last calendar year, but seeing a local positive relative outperformance trend. And like I said, significant amount of cash flow coming in on the trading week. If we can sustain that, we could have a little bit of a run here. Communication services. Similar thing for consumer discretionary, kind of vaulted up here from that neutral up into that favored. Knocking on that door in terms of upper favored, and we are seeing a corresponding relative outperformance move here for the consumer discretionary. Though to note, we do have some resistance here on the relative performance versus SPY chart that we are going to start to knock on the door on. But if we continue to get strong flows out of consumer discretionary, we could run through this and have a nice little run. But again, SEAF model is not predicting cash flows. We are monitoring the velocity of those cash flows as they're moving through the 11 sector spiders. And right now, money is aggressively moving into consumer discretionary. Industrials. Industrials has had a nice little bit of run on the relative outperformance versus SPY. Got a little bit of a hook coming on in terms of heading on to that lower favored territory. You can see that in the corresponding relative outperformance move. We are still in a minor uptrend here in terms of relative outperformance versus SPY, but seem to have stalled around this little bit of resistance mark on that relative performance part of the chart. Still a SEAF signal. Industrials isn't necessarily done yet as it's still favored, but starting to weaken a little bit and just kind of a place to watch. Now, there's really not much knocking on the door in terms of the remaining sectors. Healthcare right there, but this was a near zero on the trading week. Utilities a similar bout. So, it'll be determined to see if this industrials trend continues as we have, again, nice little relative performance mark for industrials, but, we did have a little bit of a pullback in terms of asset flows, it's 8 on the trading week regarding that score. And last but certainly least on the trading week was technology. Technology crashed from favor down into a void. We did have this big relative underperformance move here that we had after what it looked like we stalled out. But as you can see here, there is strong support here on the relative performance side at this level. We have 1 touch, 2 touch, 3 touches, right, all in the same couple of half a year out. So we seem to have a little bit of support here. We'll see what happens. We're currently trending down into a void with some really strong outflows in terms of technology, but we'll see if this support is able to hold on the relative performance side of the chart. And then regarding SEAF Ultra, we've had a couple of questions about SEAF Ultra, so I just kind of wanted to address those quickly. What is SEAF Ultra? So SEAF Ultra is looking for special opportunities to make a leverage play on SEAF signals. So the way it works is it takes the top, SEAF always takes the top 3 sectors here. So in this case, communication services, consumer discretionary, and industrials. What we do then is we take those top 3 and we feed them into another model. That model is going to be looking for things like relative outperformance, strength of asset flows, and a couple of other metrics to try to determine if we're in a special situation that we can try to take on some leverage. And then the leverage comes in the case of 2 times ETFs that mirror our 11 sector spiders. So a 2 times communication services, a 2 times consumer discretionary, or a 2 times industrials. For example, this week we don't have any special cases in which we would want to apply leverage. So the SEAF Ultra signals actually will just mirror the SEAF signals because we're just looking at that top 3 for this model. If there were to be special circumstances, based on the mathematical formula that we created, we sometimes will apply the 2-time lever. What we see sometimes too is we'll bounce between a 2-time lever and a 1-time lever. What that means is we are nearing a special situation, but the numbers are similar, close to the line. And when those numbers start to back off, we will then default, even if it's still a SEAF signal, back to the original ETF, in this case, industrials. I know, for example, industrials has gone from, in the SEAF Ultra model, from 1 times to 2 times back down to 1 times. And that's just based on the underlying numbers to determine whether or not we want to apply leverage. So while it looks sometimes like we're selling out of XLI to buy the 2-time lever, that's in a special situation that we believe will allow us to ride a trend a little bit higher and get a little bit more juice out of it. And then when we do exit that 2-time lever, if the ETF is still in the top 3, we would default back to its base level. I hope that clears it up. If you have any other questions about the SEAF Ultra, please let us know. We'd be happy to address them. I hope everybody has a wonderful holiday, no matter what holiday you're celebrating. And I look forward to breaking down the SEAF model with you in the new year. Thank you.